All right, today I'm going to be talking to you guys about a stock that I think has a 2 to 3x potential in the next 6 months. It's an unstoppable empire that seizes the imagination of each and every generation. We're talking Disney, we're talking the mouse, but these guys have lost their way. And everything seems to be going wrong for them right now. We're going to look at the fundamentals and the technicals. I'm going to show you guys exactly what I see in the charts and where the opportunity lies. And I'm going to tell you guys how I'm trading it. This is the Stocks with Josh show. I want to thank you guys for joining me on this beautiful afternoon. Thank you for already hitting the like. If you need to become a better trader and expand your knowledge of the technicals, I'm doing that each and every day, giving chart analysis and predictions on popular stocks. Go ahead and hit that subscribe and that YouTube all notification bell to get the next video. I want to start off with an overview of what we've got coming up in the markets in the next month. You guys know that I've been saying repeatedly that we're still in a downturn. We're still in a correction mode. Stocks are moving in a wider price range, but up ahead of us this month, September 19th, not this Tuesday, but the following Tuesday and Wednesday, we have the FOMC meeting as well as a rate hike decision. And here is where I see a coming D-Day occurring. Whatever happens could push the markets higher or lower. Nobody knows, but let's just look at what the market's expecting. This market has priced in from the beginning of 2023, pivoting Fed this year. However, even though inflation has been trending down, inflation is not at his 2% goal, and we may find that getting there is a little bit elusive as prices begin to go back up towards the second half of this year. Right now, the Fed funds future rate is not predicting a rate hike at all in September, and in November, there's only a 40% chance that we'll get a 0.25 basis point rate hike then. And if the market's made a big mistake in their expectations, and if he surprises us with some hawkishness, we know that it's going to be ugly. So I want you guys to keep that on your radar. September 19th and September 20th, we're going to see some fireworks one way or the other. And then I want to quickly characterize what we've got going into next year, which is an election year. And this is where things could begin to get interesting. I think the Fed ramped up rate hikes as aggressively as he did in 2022, knowing that he needed a buffer between now and an election year. I believe he's going to come under pressure to cut rates, even though we've not gotten to that 2% goal. And if that were to happen, it could cause some pretty significant swings in the market. All of this is really going to lead to some buying opportunity for long-term investors and some huge money-making opportunity for swing traders. You know that I do both. I have a long-term portfolio that I only add to largely. I occasionally will exit or enter a position. But right now, with a smaller dollar amount, I'm actively swing trading on this account and sharing with you guys where I'm getting in and getting out. And I'm going to do that right now with Disney in just a minute. Let me take a very quick station break for the Moomoo Investment app. If you need better trade tools right now in the United States, they're offering up to 16 free stock as well as a $50 cash bonus. It's available in the US, Australia, and Canada, but you have to click on the link to get the specific offer that's available for you. I'm going to leave that link in the top pinned comment as well as the description of this video. And if you've been following this page, you know that I have a free chat group on the app. Once you get your free stock and you start investing, you can come find our free chat group. It's under chats titled Stock Josh Fam. Come over there and join us. We can talk about stocks and crypto each and every day. It's a great community. But in addition to that, if you're looking for active trade alerts from myself and a group that we call the Stock Squad, that's Stock Up with Larry Jones, Stockmo, and Keenan Grace. If you're looking for active swing trades on stock and crypto, you can get that by going over to the Patreon. I'm also going to leave you a link in the top pinned comment for that. All right, I have poured over the charts for Disney today, and it's a very interesting story. I think that we are setting up for a potential 2 to 3x in a very short amount of time, and I think we're getting very close to a turnaround moment and a bottoming moment. Now, I'm talking about a 2 to 3x on the stocks. But if you were to simultaneously be trading that with some options, I think you can get much, much more over the course of time as the new trend appears. But let's take a step back. Let's look at the big picture on Disney. I'm going to be looking at the monthly candlestick chart that gives us a view of the last decade. So we're 60% down from the March 2021 all-time high, which was a move from $203 all the way to the basement at $80. That was a $123 decline. And in particular, what's so bad about that is that in the first 6 months of 2023. A ton of other big tech stocks and growth stocks were an absolute rocket ship off of their lows, and yet Disney did not participate at all. All it's done all year long so far is make a new lower high and a new lower low. And at this moment, we've pulled back to historic lows. We have the 2014 low as well as the COVID crash low, which was roughly around $80. Now, here's the warning. If 80 breaks, Disney could absolutely flush down to the next support level below, which is $76. And we're going to take that into consideration with our trade plan here in a moment. And the other thing that means is that if we were to drop beneath $79 or even $78, it would mean that the upward trend that's been in place ever since 2014 would be officially over, and we're going into a longer downward trend. So we need to watch this level very, very carefully. Now, I want to take you guys into the charts, and this is going to be like a little class. We're going to be talking about moving averages and how they relate to the long-term trend of the stock. We're going to look at the 50-day, the 100-day, the 200-day, and the 350-day moving average. And yes, in the past, Disney has come all the way down and hit the 350-day moving average, but you guys can see right now, it's right beneath the 200-day moving average. Now we're looking at the monthly candle of September that's beneath that 200-day moving average, and it's yet to close. We know that history never repeats itself, but it's been said that it does rhyme, and so we're going to be looking for some past experience to get an indication of what might happen next. All right, we're in the charts, and you can see that these moving averages are fanned out, and from a basic overview, when moving averages are pointing up and fanning out, it's often considered very bullish, but we know that when the 50-day moving average, which is the yellow one, begins to cross over or under the other moving averages, that's when things are turning bearish. And if you look at this, you can clearly see that this 50-day moving average is turning over quite a bit, moving towards the 100-day moving average. And that's where I'm expecting some action. I'm expecting the 50 to come down and touch it. But I want you guys to kind of remember the way that this looks. We're going to go back in time and see, has this happened before, and what did Disney do? So if we come back here to the 2000 to 2010 period, we have a very similar scenario in which all of the moving averages were spread out, moving upwards, and then eventually we got to this little spot here where the 50 began to curve down. You can see it's very similar to where we're at now. Right around this exact same spot where it begins to curve down and it's getting ready to touch that 100-day moving average, just where it's getting ready to move towards it and touch it. I want you guys to see that that is simultaneously the time frame in which this has bottomed out. Okay, so this was the low right while it was getting ready to curve over. After it had bottomed out, it also bottomed out right beneath the 200-day moving average. So we basically spent a handful of months underneath the 200-day moving average. And you can see right off the bat, over the first year, it made a 120% high. Then over the next couple of years, it went up 182%. And this happened to be a pretty volatile time for the market overall when Disney was having this major pullback, because this was the 2008-2009 crisis right here. So perhaps if we hadn't gone into that major housing crisis, it's very possible that Disney would have continued to move less volatile and ultimately go on the next big move that brings us to where we're at today, which it went up near 600%. Now, in this time frame, because of their many acquisitions, they were largely being viewed as a growth business. And right now, I'm going to kind of make the case that Disney is less of a growth business at the moment and perhaps becoming a little bit more of a value play based on its current price. But just to recap, the main visual that I'm wanting you guys to remember, it was when the 50-day was curving over, not having touched, okay, but just curving over in this zone is when it had bottomed. Right now, we're curving over pretty strong. We're at the 200-day moving average, same place we were before. This very well could be the bottoming zone, which means that we could have the potential of getting into Disney with a 100 or even a 200% increase in the days ahead. That's the basic game plan, guys. All right, one last thing that I do want to point out to you guys is that during that very problematic housing bubble crisis in 2009, we did have a very strong and violent move down to the 350-day moving average. And in the back of my mind, I think that if we are bottoming right now on Disney, I potentially see that we're going to see volatility ahead in 2024. I think that we could move up 120% from where we're at. This is an accumulation zone, but it wouldn't shock me if in the recession to come, we also saw a much more stronger, violent move back, a retest of that 350. We have no idea whether that's going to happen, but it's something that we want to keep our eyes on as a possibility. Once we get back up 100% on Disney, if that happens, we want to make sure that we have a tight stop loss, because I'm telling you, just like at the beginning of this video, I think that over the next couple years, we're going to have to reconcile that inverted yield curve. We're going to have to reconcile a very, very choppy market that I think is largely going to have this violent up and down swings for quite a while, and we want to see how we can profit from it. All right, so why is all this happening? What's the big problem with Disney? Why did this stock get absolutely slammed? So there's three basic reasons. Number one, these guys have been losing a ton of money creating, I would say, trash content through their streaming and their movie platforms. And then number two, there's a Hollywood strike, which is absolutely putting pressure on a not so profitable period. And then number three, as if it wasn't already a perfect storm, we've got this battle with the cable company. Now, this is something that maybe a lot of you guys haven't quite heard about, but there's a massive change occurring in the world of media. Companies are moving away from the legacy cable companies over to the model of streaming. Disney already has begun that process, which was an absolute necessity for the future of their business, but a big chunk of their profits still come from the legacy cable companies. And right now they're in an all-out war with Charter Communications. Charter Communications says, hey, we're not going to keep playing along. We need a bigger piece of the pie because our business is suffering as well. People are leaving our platforms for your streaming business. So we need, if we're going to continue to include you in our big packages, you need to pay up. Here's one of the main points why I brought that up, because we're looking for what's going to turn this stock around, turn the price action around, create a reversal moment, and it's going to be good news stories. It's going to be some of these worst problems behind them. And at the moment, the two easiest problems to solve is this dispute with Charter, and then shortly after that would be the writer's strike resolution. Both of these would be interpreted as very good news for Disney, and we're getting closer and closer to that news coming out. Over the last couple of days, we've had some analyst firms like Deutsche Bank. Basically, the article said it's in Disney's best interest to compromise with Charter and get this resolved sooner rather than later. Again, just to make it super clear, when the Hollywood strike or the Charter dispute gets resolved, that absolutely could signal a trend reversal for Disney, and that's why I'm talking about it today, because I always give you guys a ton of time to consider the play, to get into it, to do your own due diligence, and I'm letting you guys know exactly what I'm doing. That was the big picture technical view. Now I'm going to do a very quick review of sort of the micro, local, specific price entry points for Disney. In past videos, I showed you guys that Disney needed to stay above $79.07. It recently flashed down to $79.75. Who knows? That could be the low. If we move back above $80.95 soon and close on the weekly, we may not flash down. However, you need to be prepared that if we do close beneath $79.70 now, we will flash down to at least $74. My current setup is that I've got a fist of 2024 call options, and I've got some puts, but they're in a shorter time frame. They're only 1 month out. And the most important thing is that I consider this right now to be the absolutely best and most strategic accumulation zone. Just to recap, what is accumulation? It's not a lump sum buy. It's when you set your trade account to automatically purchase 20, 30, 40, 50 bucks, $100, whatever you could afford every single day over the course of time so that you get the best average price as it's coming across the bottom. We're not at Disney's tops. I already showed you the Disney top was well over $200. We're now $123 discount, 60% off, sub $80. Could it get worse? Yes, but I want you guys to remember the way a lot of you guys did not get back into Tesla when it was down at $101 because you thought it would get to 80. Now you can clearly see that if you'd bought at 100 and it dipped to 80, you can see that it went on to $300. And so squabbling over that final $5 or $10 does not make much sense for the long-term investor. This is not a suggestion for you to buy, sell, or hold. I'm sharing with you the logic that I have towards this investment in my long-term account and my swing trade account. Now, I'm pretty much going to leave it there. However, I did spend some time looking at the Gaussian channel, and it also showed something quite significant. Maybe I'll share that with you guys the next time I cover Disney, but I wanted you to absorb some technicals. I just didn't want to overwhelm you with technicals. But the Gaussian channel did something quite interesting where it turned from green to red. And the last time it did that, it was only 1 to 2 weeks away from it reaching a bottoming price. And so guys, let's put all of this into perspective from what I shared at the beginning to all the technicals that I gave you. I told you that we are about a week and a half of a trade week from the Fed's decision. And it could be that between now, September 19th and September 20th, bringing us mostly to the end of September, which is known to be a troubling time frame, getting us through the result of the Fed's decision on the rate hike. It could be that Disney is going to perfectly bottom out. If you're a long-term accumulator, I personally would be buying the entire time frame. If you're a strategic buyer, we also may have bottomed, but you guys have those specific technicals. If we break largely beneath $79.70, you know it's going lower. But either way, I wouldn't personally want to miss out on this trade for a couple bucks when there is going to then be an entire year in which we're largely going to be trending higher. I don't believe at the moment that Disney is going to be a growth story again for quite a while. I think that they're still going to be in a phase of getting themselves back together, but I think the worst part of their problems are going to largely begin to be priced in and viewed as behind the company, and then every bit of success is going to cause the stock to go up in value. So it's moving from a growth stock to a value play. Thank you to everybody that did hit the like. If you guys like this content, you found value in it, and you think you can make some money following this page, well then you got to hit the subscribe, hit that YouTube all notification bell. The specifics of how I'm going to trade Disney in the days ahead, I pretty much gave you guys the big long-term plan, but if you want to trade those options with me, you're likely going to get those in the Discord, so go check out the Patreon. There's also a link to that in the top pinned comment. You're going to get the alerts of when I go in and when I get out. My very next video is going to be on AI stocks like NVIDIA, APLD, and Sound. I'm getting a ton of requests for those. As always, peace and blessings. Enjoy your weekend. Talk to you soon.